Okay, so what's up? I will do a very clear and small and quick breakdown on these setups that I took these two trades on GBPNZD on last week, and they had this massive profit here in a risk reward of 1 to 2.26, but having a lot of pips here, and I will be explaining why do I mark this zone, how do I do my entries, how did I do my entries here, and that's all. So as you can see, this is our trade that we took on last week on Thursday, and then the other one on Friday. It gave us huge profits, and then we will be breaking down what I saw to take those two entries on this pair of GBPNZD. So let me get a clean chart. So the first things first, when I come to the chart, what do I aim in is to come to a bigger time frame. It can be the 4-hour time frame. So on the 4-hour time frame, what did I do first? I will aim for the zones that haven't been visited. So this high here haven't been visited on future, so I can mark this as an important point here for future visit of this point. Right here we had this movement to the downside, movement to the upside, and then we had this buy before the sell that created this huge movement to the downside, making this as an important zone also to be visited by the market on the future. So applying the same strategy that I will be breaking down this trade that I took on this side, basically the same strategy that we could have used on this higher time frame of expecting the price to come and visit this important area, having our entry there, our stop loss above that area, our take profit on the lower points that haven't been visited. So this one haven't been visited, and so on. So coming here to the future, what we have an important zone on the 4-hour time frame, that is this zone that haven't been visited, that created a huge movement to the downside. But then inside this zone we still have these highs here that were the important one by the time. So by marking this high, what are we expecting? We're expecting price to either come here, reject this level, go down, or price to break this and do a movement to the upside to recognize this area that haven't been visited. So coming to the 15 minutes time frame, what can we see here? Let me just delete this one so we don't get, but see, okay. So we had this important point here that haven't been visited. Let me mark this. We had this important point here that were not visited, but then on future it got visited. So this one was not longer our important point. So aiming here on future, when we see this break of this point of interest that was interesting on the past, when we see a break of this point, let me put it down here, because the previous one was, this one was no longer the important one. The important one was this one now, because this one have been visited here. So when we see a break of this point of interest here on the 15 minutes time frame, what can we see? We see a break of these highs here. There were rejection here, and we saw a break of these highs. So having this situation of breaking of highs, what I usually do, I usually take a Fibonacci retracement tool to measure the movement that happened, that created this huge break of this previous high. So picking the movement from the beginning to the end, we aim to the area of 50% to 61%, that is this one, to take our buys, and then our take profits will be there on 0.61, negative 0.618, negative 0.25, and 0. So taking our entrance here on the 50% level of stop loss on the 92%, and our take profit one here at the 0, negative 25 and negative 61. As we can see, this was a clear trade. It went to the TP. So when we reached this area, what we saw the price having some difficulty to move above this area. Remember guys, this was an important zone on the 4-hour time frame. Here we are on the 15-minute time frame. So on the 15-minute time frame, what I want to see to take a new position, I want to see first a break of structure or a change of character. So as we can see here, we had the highs and the lows, and then the price breaking the low. So here we had this high, we had these highs, and then we had this lower point. So as we can see that price swept the lower points, swept these lower points here that were here, or if you want to consider this as our point, as our lows, and then this as our highs, we can see that the price swept these lows, creating a break of structure or a change of character. So in a change of character situation, what do we want to see? We want to see the price retracing 50% of the movement. We can pick a Fibonacci here from the beginning to the end of the movement, and then aiming for the 50% area, that is this one, and then we will be taking our trade at the 50% area, that is this one. We will take a sell there, our stop loss above that area, our take profit, as we know, in the lows that haven't been visited. So these lows have been visited, those are not the interesting points for us, but this low haven't been visited, this one haven't been visited, so we can use them as our target for our take profit. So this low here, this low here, this low here, they haven't been visited, so they can be our target as traders when we are taking this position of change of character and then change of tendency to the downside. So let me delete that one. I was explaining the use of Fibonacci tool on this one, but then still we can use our strategy. That is identifying the points that haven't been visited. So here, this high here have been visited here, so making this zone here no longer important one, but making this one here the new important zone for us. So then what we do, we mark this zone that haven't been visited as our important zone. So what are we expecting? We're expecting price to come touch this zone and then do the movement to the downside, but with the help of Fibonacci also we could have predicted where the price will go, so it coincides exactly with this zone. So when we had this touch on this zone on the 50% area of the Fibonacci, and then in the important zone for us, the market did a movement for the downside, and then what are we aiming now? This point right here is no longer important because they've been visited, so we can delete this. So now we have a new point of interest that haven't been visited. That is which one? This one here, this one here. So this one here now is our point of interest that we are expecting price to come, visit, and then continue his movement to the downside. Expecting you, if you lost this entry here at this point, and then you can use again this zone as your entry point. So what can we do? We place our entry here on the area of interest of the new important point, our stop loss above that area, our take profit will still the same that we marked on the first entry, that is this one, the points of interest that haven't been visited, this one here, this one here haven't been visited, so we can use them as marks for our take profits in future. So you enter there, your take profit will be down there, and now this area here is the important one that haven't been visited. So the previous one is no longer important, this one is no longer important because it's been visited. So now we come to this one that haven't been visited, expecting in future price to come to this area, show some rejection, and then we can take another trades. But then what we saw a break of structure here in continuation. With a break of structure here, what did I see? I see that I can still use my Fibonacci. Why? Because we still have some lows there that haven't been touched yet, as this one, this sell before the buy as an important zone. There is this low here that swept this previous low, making this one no longer important and this one the important one now. So let me mark this to see that the price will tend to go and cross those levels or react to those levels. So taking a Fibonacci tool here, we can target the 50% area of retracement because the movement is already happening. So most of the time, if the price doesn't come here to the point of interest, it will go from the 50% area of the Fibonacci. So if you lost these two entries up here, your area of interest will be very large, will be very big if you use like Fibonacci and you're expecting a 50% retracement. Okay, so marking this area as a new important zone of interest, we can mark a 50% retracement. Our entry at the 50%, stop loss here will be high, but then our take profit will be the areas that we first marked on the first operation, that it was this one of the change of character. So here the take profit will be there. And then what we saw the market going down. When we have this retracement, this will also be an important area right now for us, for the price to come on future and react to this area. So the same thing that we did here, we did here, up here. So you see what happens when the price comes to this level, it tends to react to the downside. So what are we expecting in future? If we come to this level, the price shows some rejection to this price, because this area haven't been visited. So when price comes, if you lost this entry here, when price goes down, you could have taken some profits here if you entered here. When the price comes to this zone that haven't been visited, it goes up to reach these points of interest that have not been visited. Look what happened. If you entered your position up there and then you closed it here, when the market touched this zone, you could have entered here. If the person lost all the entries 1, 2, 3, you could have entered here. Your stop loss will be above this area. Your take profit will still be the new areas that haven't been visited. So this one have been visited. We should see here which lows haven't been visited. As we can see, we have a bunch of lows that haven't been visited here, like this one, this one, this one, this one, this one. So this can be our very important zones for the market to reach them, and we can use them as our take profit. So these zones here are the zones that are very important. And then we can see clearly what the market did. The market came to reach those zones, and then the market started consolidating here because it was the Friday, the end of the market. So this is how I take my analysis. We had clearly 4 trades here. If we push these entries to the last TP here, we can see that we had a 1 to 11.6 risk rewards, a 1 to 14.97 risk rewards, a 1 to 3.56 risk rewards, and a 1 to 6.74 risk reward. All this based on this first thing that we identified up here. So that's it. Thank you.